Ladies and gentlemen, welcome to APF Holdings Investor webinar. We will start with company's presentation and continue with a live Q&A session. To join the discussion, please submit your questions through the Q&A window below the presentation. This session is being recorded and will be available for rewatch shortly after the call. Let me now introduce you to our hosts, Yuri Sadamovic, Group Founder and Chairman of the Management Board, and Mihail Skeziks, CFO and Member of the Management Board. Yuri, Mihail, the floor is yours.
Thank you. Good afternoon, ladies and gentlemen, dear investors. Welcome to our webinar on the semi-annual results. So today we'll go through the following agenda, the one that you currently see on the screen. The first four items will be covered by myself. Then my colleague Mihail will give overview of the egg industry, our sales performance and key financial indicators, and we'll wrap up by saying a few words about our key goals for the second half of this year. So key indicators for the first half of this year, you currently see them on the screen. So the key operational and financial metrics are as follows. We have sold 48 million eggs, which represents a 7% decline compared to the first half of 2023. Our EBITDA is 1 million euros, which represents 49% decline over the corresponding period last year. In terms of revenue, we have reached 5.9 million euros, which is 15% decline if compared to the first 6 months of last year. Gross profit is 1.5 million, which represents 31% decline if compared to the first 6 months of last year. And this semi-annual period is also important for us by becoming a fully green company. From July 1st, we have completed transition to the green energy, and we only use green electricity in our operations going forward. If we say a few words about the new products and cooperation agreements, the first 6 months of this year have been fairly active. We have entered into a number of new partnerships. The most notable of those are new agreements with such well-known retail names in our region as Sky, Maxima, Lidl, Prisma, and Virši. In the first 6 months, we have also introduced a new product to the Baltic market. Now our eggs are available under the trademark EggJoy, which is again available throughout all Baltic countries in some of the leading international retail stores. This product is packaged into environmentally friendly RPT plastic packaging, which is reusable, recyclable, and can be reproduced numerous times. In the first 6 months of this year, we have also started cooperation with a number of well-known and popular food producers and restaurants. Among them are such well-known names in Latvia market as Laci, Ezdes, Migla, and Maxima Latvia. When we speak of Maxima, that relates to their food production segment. So basically, these are all the food production companies which have publicly declared their commitment to use cage-free eggs only in their food production activities. Sustainability continues to play a crucial part in our production processes. In February 24, we have reaffirmed our compliance with high energy management standards. We have repeatedly received our international energy management qualifications according to ISO certification standards. In the spring of this year, we have fully completed commissioning of the solar energy park in Alūksne. We have installed almost 400 solar panels in Alūksne, and these are basically in the summer months almost fully meet our electricity needs. And as I said earlier, starting July 1st, we have fully switched to using renewable electricity. Basically, what we did, we have signed contracts with electricity providers, and from the external market, we only buy electricity produced using hydropower sources. Basically, yeah, as I said, starting July 1st, we only use green electricity in our production. Next slides will be on the update of the execution of investment program. You can now see the progress on the screen in terms of visuals and also the key metrics. We are well on track with the extension of the warehouse and the building that is going to be used for the production of liquid products. The completion rate is 43% as of the end of June. Actually, the project is progressing very well as we speak. The delivery of equipment is scheduled for the first half of September, and it's expected to be fully assembled during September, followed by testing operations in the beginning of October, and by the end of October we expect to fully launch this facility. When it comes to the extension of the egg production, as you recall, we are building fourth and fifth barn simultaneously. The current timeline for this project is as follows. We intend to fully complete the construction of the fourth barn by the end of this year, and installation of equipment will be completed in January. And in January, this barn will be populated with a new flock. And the fifth barn will be completed in May 25th. Completion here implies that we'll also be populating this fifth barn with the new flock. At the end of June, the completion rate is roughly 21%. Now I'll give the floor to my colleague Michaels, who will walk you through the egg industry and our sales team performance.
Thank you, Yuri. Thank you, dear investors and shareholders. Let us now jump to the financial data and statistics. And I would like to start with the general overview of the market situation and the overall circumstance we are working in. We were working during the last 6 months. And we would like to start with this slide, presenting you the data we get from Nielsen IQ company, giving the data of eggs sold in Baltic markets by the way of keeping hens. As you may see in the middle of this slide, the share of the barn egg production or indoor housing egg production is still below even 50% of the market, but we can see that the best share is, the largest share is in Lithuania. It's already reached over 30% of the market, and we are very happy and proud for our Lithuanian neighbors. But the most important information is on the right side of the slide, where you can see the change in the market comparing last 6 months of this year to the previous to the first 6 months of the previous year. As you may see in all the markets volume was not big changes. It's almost remained in the same level, but you can see that cage eggs production is decreasing in all 3 markets, and indoor housing or barn eggs production is increasing. What is a good news for us, which also supports our strategy to develop in this segment. Another slide, another issue I would like to raise today, and to explore the situation with egg import from Ukraine to Europe during last periods. As you may have heard, the eggs in Ukraine are produced not in compliance with EU requirements, and due to this, those eggs cost of production of those eggs is much lower than any European producer can have. And as European Commission data says, you may see that egg import from Ukraine is increasing in geometrical sequence progression during last periods every month, making a new historical maximum. And during the previous year, 2023, number of eggs imported from Ukraine was twice higher than the amount imported in 2022. And during 6 months of this year, the import from Ukraine reached 3/3 of previous year imported eggs. This, of course, have significantly impacted the prices of the eggs in Europe and especially in Baltics where we are operating. And consequently, we provide here the comparison of egg producer sales prices for fresh eggs for first half year of this year for all 3 Baltic states and Poland compared to APF egg sales price in this period. As you may notice that in the second quarter of this year, there was a explicit decrease in prices, especially in Poland and Latvia. And as you may notice, only IPF prices and Estonian producer prices was on a similar level and higher than the rest. And in terms of APF, we must say that this was achieved due to decrease in production of APF that was done as a reaction to this situation with the import of eggs from Ukraine. Of course, this decrease would impact our turnover. It will impact the amount of taxes will be paid to the country and to the salaries paid to the personnel, etc. But as you may see, still our prices was higher than the market, and it helped us to remain operationally profitable. Now, before we jump to the financial numbers, I would like to present a few more slides about our main sales KPIs. So in this slide, you may see distribution between egg sales to retail supermarkets and to the industry for further eggs processing. Our aim is to reduce eggs sold to processing, and as you may see, it was slightly achieved in this half a year, but we expect that it will be even better achieved in the upcoming periods when the market will shift to cage-free egg sales. In the second slide, we show the split between number of eggs sold under APF brands and number of eggs sold under the private labels of the supermarkets. As you may see, the share of private labels have increased in the recent 6 months, but it was such a result we received due to starting cooperation with new partners, with new geographical regions where we have to start with the private labels, and in general we value as a positive issue during the last 6 months. And this also, this expansion of our market can be seen in this breakdown of our export and local sales, and we are proud to say that we have reached 80% of our sales increase, up to 80% of sales into the Baltic markets. And this was in general achieved by increase of sales in Lithuania, where, as you have seen in Nielsen's slide, the barn eggs have the biggest share in the market. Let's now go to the financial indicators and discuss the factor analysis of the change of EBITDA that we have achieved in the first half of 2024, comparing to the first half of the year before. So as you may see, the total decline in the EBITDA reached over 900,000 euros. And the main reason, of course, is a decline in incomes from ex-sales. That is a result of price decreases and production capacity decrease. Partly it was compensated by decrease of feed costs, and as a result, we finish this half a year with adjusted EBITDA in the level of 960,000 euros. In this slide, I would like maybe a little unusually, but still compare our last 6 months result to the second half year of previous year, 2023. In both periods, Ukrainian impact was already serious, and we was working on similar circumstances. So as you may see, egg sales was still decreasing due to mentioned reason, but in this half year, we were able to significantly decrease the feed costs, and with minor changes in other positions, the first half year of 2024, we finished with 40,000 euros better than last half year of 2023, which shows a positive dynamics that I would like to emphasize. Now, after that, let's analyze also our net result for half year of this year, comparing to the respective period of the previous year. As you may see, yes, full profit of the previous year was decreased by decrease in the EBITDA shown and analyzed in the previous slides. But also there was one more expense position, which is a fixed asset disposal or write-off. As you know, in this year we are undergoing the significant investment plan under which we are rebuilding and building new facilities, where we have to also exclude or sell or dispose our old facilities that we do not going to use anymore. So this expense was reached almost 300,000 euros, and it is explicitly not operational expense and one-off expense that will not going to impact us in the next periods. And here I would like to also compare our net result for this half year with the second half year of 2023 again, where EBITDA operations was similar, and the only significant change is due to this fixed asset disposal, as I said previously. And if we didn't have the investment plan in this year and didn't have this expense, our net result for this 6 months period will be better than a net result for the second half year of 2023. And so actually resuming what I have said previously, in this slide we put together all main indicators, and here I would like to again emphasize this positive dynamics we have comparing first half year of 2024 to the second half year of 2023. As you may see, there was some decline in revenues, but still this decline was lower than decline in number of eggs sold. You can see some increase in EBITDA and in this adjusted EBIT parameter, which is adjusted only for this loss from disposal of fixed asset that I have said previously. So I would say, given current market circumstances, APF was able to show the positive dynamics during the last 12 months period, and that would mean that even current situation we have under control our operation and was operationally profitable. And another issue I would like to emphasize as last here is an issue of additional external debt. We have risen during this year to finance our investment project that we are doing now, but the additional revenues and profit from it will only come next year. But still, such parameters like total debt to equity or net debt to EBITDA remain is in a we'll see healthy and acceptable levels comparing to the previous periods. So also this parameter is under control, and we are continuing our investment project in line with our strategy that was previously announced during the IPO. Let's now then switch to the year 2024.
Yeah, so thank you, Michael. So this will be the last substantive slide from our side, which summarizes the key goals that we have set for ourselves and for our team for the remainder of this year. So as you all know very well, this year we're busy with execution of a fairly ambitious investment program, with a fairly ambitious capex for the scale of APF. Therefore, one of the key goals is by October 24, complete fully the expansion of the warehouse and construction of the egg processing facilities. So those need to be fully completed, commissioned, and put into operation. Also, coming from this, in October 24, the liquid egg production plant needs to be fully operational, up and running. And also we intend to start the distribution of own products produced in Alūksne. The distribution should start in October as well. Next one, also which is critical for our subsequent investment phases. Now the launch of the production of the liquid egg products will imply that formally APF can recategorize itself from being currently only primary agriculture producer to the food product producer, which is critical for various formal considerations for our subsequent applications to the usage of European Union structural funds. And the last but not least, by the end of this year, we intend to fully complete and officially commission the construction works of the fourth bar. So I will stop here, and we'll open the floor for the questions from our investors and shareholders.
Thank you for the presentation. Now let's proceed with the Q&A session. And just a reminder to attendees that you can submit your questions in the Q&A window, and you can submit them also anonymously. And let's start with the first question we have received. What drives demand for your products currently?
The key factors behind the demand remain the same. Obviously, as you have noticed from Michael's part of presentation, last 6 months, the competition have been fairly distorted because of the huge influx of Ukrainian egg, which, as Michael rightly pointed out, is substantially, I would even claim, 2.5 times cheaper in terms of production cost than any European producer can achieve. What it implied for the local and for the Baltic markets in particular is that there are various retail chains who basically switched to selling Ukrainian products only. In Latvia, we even had a couple months of this year, actually of the first half of this year, when you would enter a local store and you would not see any Latvian egg at the shelves at all, which is very critical, never ever happened before. And of course, it has had very significant negative implications on the net financial result. The good news for us is that pretty much all large international retailers have basically reassured their commitment to the high quality, high standard EU produced products. So the demand from large international retail chains is still there. We don't see sort of significant shifts in terms of the volume of the product, but obviously the fact that this cheap Ukrainian substandard product is available, of course, pushes the overall level of the prices downwards, and obviously puts us and also other players in our industry into very uncomfortable position.
I would like maybe also to add here that in our development in barn eggs production, our production volume that we have reached put us actually in line with the largest egg producers in region, and this makes us like the top one choice for the big retail chains in the region to cover their demand for the barn eggs, which is increasing, and it's Rimi, Maxima, and Lidl are very interested in cooperation with us, and that's what drives demand for our eggs recently and will only increase in the coming periods.
Thank you. The next question is, how much more of external financing do you plan to attract to complete IPO target?
At this stage, we do not plan any additional fundraising efforts. As our investors and shareholders might recall, in February this year, we have completed a bond issue, which was the entire placement was bought out by the Polish investment fund called CVI, and the agreements that we have in place also stipulates that there is a soft commitment from the CVI to provide additional financing in the amount of 5 million euros to fund remaining capex need. In case of any shortfalls, the additional funding will be provided by UBO in the form of loan to the group.
Thank you. All questions are now answered. Thank you all for participation, and the recording of the webinar will be soon available online. Please follow APF announcements to stay up to date with company news. Thank you.
Thank you.
Thank you.